Over the next 3 months, I have no idea what it will do, but looking 2, 5, or even 10 years ahead, I'm bullish. I was quite dubious about the asset for a long time. What if there's a better currency out there, or if the whole market becomes too saturated? I couldn't help but wonder. However, after investigating the technology and its design rationales, I was able to see the network effects materialize. I have been quite structurally positive on it since the beginning of 2020. Even now, more than 4 years later, that remains true. Many people in the Bitcoin and cryptocurrency world hold Lyn Alden in high esteem as an investment strategy and macro analyst. Not only does she have an excellent understanding of macroeconomic concerns and how they influence asset values and the economy as a whole, but she also has a knack for making these complicated concepts easy to understand. In every interview, article, and tweet that Alden provides, her profound knowledge and admiration of blockchain technology and Bitcoin shine through. Her unique experiences in both engineering and finance. As her 2023 book, Broken Money: Why Our Financial System is Failing Us and How We Can Make It Better, further demonstrates, Alden has a keen understanding of the global macroeconomy. She examines the world's broken financial system in her book, detailing how it robs billions of their wealth while the wealthiest few get richer at an alarming rate. Our monetary system is dysfunctional and out of date, according to Alden, even if we live in an era of abundant energy and technological developments that have greatly enhanced our lives. The worldwide monetary system, according to the book's back cover, is like a barter system with more than 160 distinct currencies, each of which has a monopoly on its own territory. There are a lot of roadblocks, frictions, and currency adjustments caused by these currencies because they depreciate quickly and aren't widely used outside of their home countries. If you were born in the wrong nation, as Alden claims, saving money is more difficult than it has to be. Although lesser currencies currently have a lot of value relative to the US dollar and other major currencies, Alden claims that these weaker currencies will crash at some point, turning today's strong currencies into tomorrow's weak ones. A situation like this might cause the US dollar to go the way of the bolivar, or the pound in Venezuela or Lebanon. That is why rational thinkers like Alden think our current monetary system needs a complete makeover. Their proposed alternative to the current debt-based inflationary system centers on deflation, scarcity, decentralization, and the use of a strong digital network to facilitate frictionless payments. Naturally, Bitcoin satisfies all of these requirements. Alden thinks that the US and the rest of the globe will be impacted by the current dismal financial situation and the increasing global popularity of Bitcoin. Here we have a centralized money system with 2 or 3 tiers, and that's where the problem lies. Thus, it's safe to say that the United States has enjoyed relative prosperity for the last 50 years or more. There are a lot of places to save you our savings, and our currency depreciates slowly. A country like Egypt, on the other hand, does not have the SP 500. As a means of amassing wealth, their stock market is untrustworthy. Real estate is in their possession, but it isn't exactly a liquid asset. Thus, there are numerous drawbacks associated with that. Obviously, they can't put much money into their own currency since over a 50-year period, inflation averages double digits. For example, Bitcoin and other stable coins work by allowing you to transmit funds to an institution that holds dollars or T-bills, and in exchange, you receive tokens that can be exchanged for those dollars, at least by large entities. Therefore, they are essentially digital versions of traditional banknotes. Next, even tiny entities without the authority to redeem them can nonetheless trade them. The primary benefit is that it gives nations the chance to acquire dollars, which they have long sought as a stable alternative to their own currency that lacks the extreme volatility of alternatives like gold or Bitcoin. Assuming they possess a smartphone, it grants them easier and more computerized access to dollars. As a result, they have massive popularity in countries like Nigeria, Argentina, and Lebanon. In our planet, there are around 160 different currencies. In a way, they're all monopolies in the center. You must have faith in the Nigerian government and its central bank to handle the country's currency if you are in Nigeria. Because, well, there's only so much money you can bring in or out of an airport. The borders are quite strictly regulated. Bank transfers are highly regulated and frequently executed at manipulated exchange rates that deviate significantly from the real market value of the currency in question. If a graphic designer in Nigeria were to hold up a QR code during a video conference, I could pay her in whichever currency she desired thanks to stablecoins and Bitcoin. It would flow to her via her local banking system, whether she asked for Bitcoin or dollar stablecoins. She can thereafter utilize that in a peer-to-peer setting. It will be hers to take with her if she ever decides to leave Nigeria. With her currency monopoly broken, she essentially has greater leeway in choosing her spending habits. One such version is Bitcoin, which is completely decentralized and has an infinite supply. The one lacking a central hub is the one that isn't. You have to face the fact that it's more volatile and you don't know what it will be valued in, say, a year or two. The main drawback of stablecoins is their complete centralization. Somebody or some organization is in possession of the assets. Belief in them is essential. You must have faith in their capacity to function inside their regulatory framework as well. In my view, however, they function more like offshore bank accounts for the middle class and working class as a whole, rather than only the rich. If you're an Argentine and you don't trust your government to manage the currency, they essentially just reduce the overhead of maintaining that system. You might be wary of banks because of their checkered history of returning customers' funds. They justify their decision by saying, "I'll trust this offshore entity for tiny amounts of operating money, but I fail to see how Bitcoin could be useful to a modern American in any practical way." Of course, one feature of money is that it is something you own regardless of whether you plan to spend it or not. From a historical perspective, that is where money originated. Therefore, if we own a gold coin, for instance, we probably won't be using it to make jewelry or fuel our factories anytime soon, but we do so with the understanding that it serves a purpose for other people. Asset preservation. To add to what you said, Americans usually don't have any problems making payments or even saving money. There is an abundance of trustworthy savings vehicles available to us. However, when considering its potential utility for billions of people globally, it becomes clear that approximately half of the population is subject to authoritarianism, while the other half faces constant double-digit inflation and possibly hyperinflations in our lifetime. Many Americans view Bitcoin primarily as an investment. Over a 3, 5, or 10-year period, it has surpassed the performance of the S&P 500, the NASDAQ, and nearly all other companies except Nvidia. It seems to reason that we in the West would view it as an investment. On the other hand, any one of the borders involving the roughly 30 currencies in Latin America or the 40-odd currencies in Africa causes friction. It is not a good idea to own most of those currencies. It's an investment for those who can see the value in it, even if it doesn't directly impact them, because it serves a purpose for them. In my opinion, the factors we discussed earlier in the conversation are leading to this more systemically high inflation. That being said, it is not necessary for them to occur in a rush, that this must come to a close. Looking at the big picture, the Congressional Budget Office projects a net treasury issue of $20 trillion over the next decade. There will be no recessions, they predict. Therefore, that figure is likely to be larger in the event of recessions. Typically, they fail to hit the target. Therefore, we will issue $20 trillion in treasuries to be conservative. Looking at the amount of gold that will be mined in the next decade at the current price, it's close to 2.5 trillion. At its current price point, there will be around 70 billion Bitcoins created. Naturally, if more people wish to invest in gold and Bitcoin, their prices can rise to accommodate the influx of capital. However, the main idea is that if you're essentially asking what rare item, when I like to own, one of the options is, of course, good stocks. One of the choices could be high-quality real estate. Among the alternatives, particularly for affluent investors, has always been art. In addition to its many other appealing qualities, Bitcoin stands out as an investment option because to its low fresh supply growth rate, portability, fungibility, and liquidity. In some nations, it could be seen as a lifeline, but from an American point of view, it's usually seen as an investment. Over the next 3 months, I have no idea what it will do, but looking 2, 5, or even 10 years ahead, I'm bullish. I was quite